What's up, crypto fam? Welcome back to part 3 of our trade analysis mini series. In this mini series, you're going to find everything you need to know about trading crypto, trading correlated markets, understanding how to overlay Fibonacci settings across multiple time frames. Playlist links down below. So if this is your first time watching this playlist, you might want to start at video 1 because it'll help everything make sense. In today's video, we're going to talk about how to build a trading thesis, aka I call it a strategy, to understand correlated markets. So we're going to talk about BTC and Ethereum in correlated markets and how you can actually build a thesis to execute long or short positions in any type of market. Ready? Let's dive deep.
So now we're going to be looking at how you can use these correlated market facts to help you build trading scenarios.
Okay, and can you explain what that means?
Absolutely. So if we go back to the BTC, I do pay for TradingView, by the way, though. That's why I can't have unlimited charts. Just on a side note, let's go back to this chart. Perfect. So see how here we set up our trade scenarios based on Fibonacci patterns.
Yep.
That we built on top of Bitcoin US dollar. What we want to be able to do, though, is we want to get a bit more of a clearer understanding because a lot of people here are trading cryptocurrencies. We're not just trading US dollars, right? And a lot of people say, and not a lot of people say, a lot of people are aware that the markets move with Bitcoin. But what does that actually mean? And how do we use that when constructing trading scenarios for other tokens that we want to be purchasing? For example, let's say Ethereum. How do we build into our trading case for Ethereum Bitcoin's price action? Let's have a look at this. Now, our first step here is going to be to look at the Ethereum Bitcoin chart. Let's get rid of this. We don't need that anymore. We don't need that anymore. And we're going to do a Fibonacci because we love our Fibonacci ratios. Forgive me, there'll be a wasp flying around my screen, but it doesn't annoy me. So as long as it doesn't annoy you. Now, for here, I'm putting up a simple Fibonacci back to April, and that is for the exact same reason as I did the Fibonacci on my first chart, which is this is the highest point of the year. Now, I want to do a bit more of a local Fibonacci. By the way, I should add, this is Ethereum Tether, and we'll do another little local Fibonacci, sort of from the same bottom point here and up to the top of the local range. Oh, no, up to the top of this range. Oh, which in Ethereum is a little more interesting.
Define local really quick. What does local mean? Just smaller time frames when you say local? Is that what
smaller time frames? Every time I'm localizing the range, I'm doing it in a smaller time frame, right? So when I say local is a term that exists in perspective, right? This is the local time frame with respect to that. But if I go here, this is the local time frame with respect to my second fib.
And on your fib levels, like on my charts, I got the 0.263 turned off. You seem to have all yours on. Is there any? Do you trade every range?
Absolutely, because when you start overlaying Fibonacci's on top of each other, you'll start to see that price action often plays between Fibonacci's on different time frames. Let me show you an example, because there's one right here. Actually, I want to keep the same color pattern as the last. We'll make the biggest red, the middle purple, and then the little one yellow. Now here, we can see that we've actually got a play between the large fib range and the small fib range. Here's the large fib range that we're playing on right here, and here is a smaller fib range within it that sits inside this larger fib range.
Can you draw a box on the screen and show me? And are you supposed to be going from the top of the fib level or just the top of a candle on that?
Well, on this one, I've already put the fib levels down, right? So the reason I'm going on this is because this is where we're getting some, we're also getting it here actually. This is where we're getting some interesting overlay play. So this is where you can start to see different time frames playing within each other. And this is when people say that the market acts on multiple time frames at once. This is what they're talking about. And we're about to see it here on Ethereum. Here I've got, and let me just mark out each of my price ranges as well with
Thank you.
Let's put the shorter time frame fib levels on a little bit further out. No, we'll put the red ones further out, yeah. And then we'll put the red ones on the other side. So here we've got the red level here, and here we've got the red level here. So here we're playing within two time frames. We're actually playing within more at once, right? But this is the time frames we're playing on. I did a Fibonacci for this entire year. I did a Fibonacci for this range, which is the range that we hit on the 12th of May, right? And then we came into this range between 21 and 885. Wow, that really went low. Glad I didn't trade Ethereum that day. So here we've got these two levels on the 1 year. Here we've got 3 levels, and actually let's get the 4th. 3 levels on the local range, 4 levels on the local range. Now, if we look at the price action, we can see that in a motion from this level to this level, we don't just move like this. what do? We go down and then we try to push through this local level here. And then we go back down and now this local level's resistance. And now this level here has become, support. And now this level up here has become resistance until we're able to break this level and also simultaneously test the level on the larger time scale. But then that double resistance, so you basically have 2 time frames resisting you at once there, wasn't able to hold. We break back down through the local support, and then we're held at where the local support meets the local resistance. The larger time frames support. I'm saying support and resistance too much. I'm getting confused. Then we can see that from this level here, we actually play up to the next local resistance line before we try to break through that double support level and aren't able to hold. And then we've got more play between this local resistance and support. We break through that local resistance support to the next level of resistance and support, but aren't able to make it up to that double resistance support line where we've got the 2 time frames. And then we come back down and now we've broken below that local double resistance and support. So that's what I mean. When the market is moving, it's not just doing that, it's doing that. And each of those, I hope that was at the screen because I can't actually see my screen.
Do it again.
So, yeah, it's doing this.
Yep.
Right? And those little motions in between are those local resistance and support levels overlaid on top of the larger resistance and support level that's moving. Yep. This is essentially the basis of Elliott-Sonian wave theory, right? If you ever looked at that or you've ever touched on that. We're not going to touch on that today, by the way. That's a whole lecture series on its own. Okay, so what we can see here, this was actually a little bit of a sidetrack. This was just showing you how the market moves within Fibonacci patterns, right? Yep. But what this gives us is a firmer understanding of these support resistance levels. And it gives us an understanding for what I was talking about before, which is that support resistance zone rather than just a level, right? Because now we can see that there's a strong support resistance zone between my longer time frame resistance or support and my shorter time frame support. And the same up here, we've got our resistance zone between our shorter time frame resistance and our longer time frame resistance. So that means when we come between these levels is when we expect to start getting sold down. When we come between these levels is where we expect to start getting bought up. And that's why this candle right here is a very strong candle. It's a lot stronger than, for example, this candle, right? Even though this candle is bigger than this candle, it might be, they're about the same size. Let's look at this candle, which had more volume. This candle, which had more volume than this candle and is longer, is actually less of a damaging candle to the market than this one, right? Because this candle here is the one that's pushed us through this double support zone, or this support zone, not double, it's just a support zone. And now we haven't been able to break back past or even into that support zone. Oh my God, I hate doing that. That's about right. So does that make sense?
Yeah, 100%. Yep.
Do you have any questions around that? Or do you think anyone might have any questions around that?
No, that was really good, man. That was a great explanation.
Okay, so let's look at the Bitcoin Ethereum chart together. So this is Bitcoin Ethereum, and this is the price action between Bitcoin and Ethereum. And we're going to start to look at essentially how we can use this chart to start building a firmer narrative around how the market is moving, right? Because that's all the market is. The market is a narrative. The market's a story. Your job is to try and understand the story and then bet on its outcome. That's a bit of a pessimistic way of looking at it. Yeah. So let's go back to, again, the highest point of this year in this chart, which the highest point in this year in this chart was up at 20 back in June. Interesting. So let's do this time frame here, which seems to be this range. And we do also seem to have a local range here, sort of. This is the very top of that local range. This is the bottom of that local range. So let's do a much shorter time frame here, from here to there. I might even take it a little higher to there. Yeah, I'm happy with that. Again, these are all a bit done on the fly. I'm not going for absolute accuracy here, guys. So, oh yeah, look, we can already see some utile price action between those. So if we look here, we can see that we've sort of played around a little between these zones here, and it hasn't been able to hold twice. Here is a pretty clear support resistance. Here's a pretty clear zone on this shorter time frame. And also, we've really tried to tackle it, but we haven't been able to. Now, remember, actually, I should add, here, I'm talking about Bitcoin Ethereum. So that means when I say we've really tried to push down, I'm not saying the same thing as when I'm saying in Bitcoin, USD that we've really tried to push down. And let's just get a bit of an understanding around that conceptual change in the mode of thinking that you have to do when looking between markets, right? Here, if a Bitcoin, Ethereum goes down, that means that Ethereum is getting more expensive with respect to Bitcoin, or Bitcoin is getting cheaper with respect to Ethereum. So that means that my relative value, and we should do a bit of a discussion on relative value, my relative value is moving towards Ethereum if this market is going down. My relative value is moving towards Bitcoin if this market is going up. So when I'm saying that between these two levels that we're struggling to push down past these two levels and that they're providing very strong support, I'm saying that this is going to be difficult for Ethereum's relative value to Bitcoin to cross this zone. Now, let's just use that, and let's just use that concept right now to give us what would be effectively a useless analysis of the market, right? But whilst it's a useless analysis of the market, it's still something that's powerful, and you'll see how it's powerful. This level here is 12.43, right? So that means one Bitcoin would be buying 12.43 Ethereum. So if we do 1 divided by 12.43, that gives us 0.08. So that means one Ethereum is worth 0.08 Bitcoin. Now, if one Ethereum is worth 0.08 Bitcoin and Bitcoin is worth $18,000, let's take it from the bottom of this zone here, right? That means that Ethereum should be worth 18,118 multiplied by 0.08. We're looking at an Ethereum being approximately 1449. So let's call that 1,450. That means if Bitcoin, and we can say that this is the range here, just say in this area here, we would not expect Ethereum to be able to cross this line, right? Why? Because its resistance is very strong in the Bitcoin Ethereum. So that means right now, I've already got an upper bound for an Ethereum USDT trade, right? I would not be expecting this market to be crossing 1450, right? And look, we can be a little bit more accurate with where it is right now, 19,122. We'll do 19,122 multiplied by 0.08, which is 1530, right? So it's trying to get a trade long on Ethereum right now and having a thesis that goes above 1530 is just an incredibly unlikely thesis, right? Why is it an incredibly unlikely thesis? Because that would require my Bitcoin Ethereum to be able to hold this zone. And that's just not likely to happen. We've seen it fail twice, even when it did really try to hold this zone coming into the merge, right? So we've already pulled some useful information out of looking at the relative market. This market moves in lockstep with this market, which in turn moves in lockstep with this market. Yep. So behavior in this market impacts behavior in this market and that market, and vice versa. So Bitcoin impacts Ethereum, and Ethereum impacts Bitcoin. And Bitcoin Ethereum impact Bitcoin USD, and Bitcoin USD impact Ethereum USD. Yep. Because you're able to arbitrage through Bitcoin Ethereum. And that's what they mean when they say the market is this super complex structure that no one can really understand. Right? Because all of these things are playing off each other all at the same time, and it's impossible to know everything that's happening at once. So what we've just looked at there, and I think that was a really good example of it as well, Ryan. I was really happy with that, because I just showed you how you can look at this market and you can give yourself an upper bound in the Ethereum USD market, for example. So even though my trade line may be here, and it's not, it's here. Even though my support line is 1564, and my resistance line my resistance line are between 1554 on the long and 1479 on the short, I've actually got now a new point that I can say, which is my resistance on my Bitcoin Ethereum chart. My resistance on my Bitcoin Ethereum chart indicates my relative value shouldn't cross 1530.
That's so sick, dude.
So now this would be, in my opinion, a much firmer position to put a long trade thesis stop on, right? A short trade thesis stop. If I'm going to go short, I'm not going to want to be going past like this. You're not likely to be hitting this point, right? So this is going to be the very top end of my long, or this is going to be the very top end of where I'm going to exit on a short. More than likely, I'm going to be using these points here on a short to exit, because there's no point going all the way out there. And if I'm long, I'm probably going to be exiting at these points, because this one is a very strong one based on our relative value on the Bitcoin Ethereum. Boom. And that's it, right? That's how you use relative value and you use correlated markets to help you hone in on your trading plans. And you can do this to infinity, right? And it can turn into a bit of an obsession trying to, and that's why traders, by the way, have 50 charts up, right? Because they want to be looking at the markets at the same time. That's why they have 15 screens. So if we look at, and that's what hedge funds are doing. That's what everyone who's doing, if you see anyone with those 6 straight screens up looking at it, the reason they've got it there is because they're trying to look for when there's moments that correlated markets move out of correlation and to understand where the relative value is at the point that that market has moved out of correlation, right? As I showed before with the JPY USD across all the other USD markets, we moved out of correlation when it went up in the JPY, and the relative value was in the downwards direction because all the other markets continued going down.
And that's a wrap, YouTube. Make sure you guys swing over to Twitter and check out BY Finance. Make sure you show Steve some love. When it comes to trading crypto, I personally have never met a better trader. I've never met somebody that understands trading markets better than Steve. He's an ex-hedge fund trader. This guy has a plethora of knowledge. And if you guys want to learn more about trading, check out their trading channel in their Discord. Swing over there, show them some love, tell them I sent you, and I'll catch you guys in the next video.